Well, the fallout from the beginning of the global banking crisis will hit the Australian stock market today after shares in the Swiss banking giant Credit Suisse collapsed to an all-time low overnight. Our business editor Ross Greenwood joins us now. Ross, how far is our market going to fall?
Well, it's expected to be around 1.6%. We'll see the first opening of the market come up very, very shortly as we get live prices in from the ASX as it is opening right now. But it really is one of these situations where a contagion, as a result of the fall of the Silicon Valley Bank in the United States, then going through to Europe. And one of the most vulnerable banks there for quite some time has been seen to be Credit Suisse banks, one of the most significant and certainly vulnerable banks in the whole of the area. So here is the Credit Suisse share price last night. It's closed down at €1.70, 24.24% down overnight alone. But if we go even further forward, you can see that the share price is down some 76% in the past year. So this is a significant move. It also then had a big impact on the US markets overnight with the Dow Jones index well down. And this is the reason why the Australian stock market is also expected to fall. So you can see here almost a 1% fall in the Dow Jones index, but the impact on Australia's market is seen to be even greater on the opening today. Now, the interesting thing is, as a result, this contagion, the question about how far this goes to, is now occupying the minds of bankers, of investors, certainly of governments around the world. Let's go here to Zachary Feinstein from the Stevens Institute of Technology in the United States.
These are, in some sense, contagious in that they really are people looking at these balance sheets in new ways. Credit Suisse is kind of a confluence of these crises all happening at once, and that being such a big player in the financial system, anything that will hit them could ultimately spiral and cause a much larger financial panic.
OK, Zachary went some way to explain what is happening right now. But Ross, can you explain why is Credit Suisse in this sort of mess and what's the way out?
OK, so go back in history. Credit Suisse is one of the most important banks in the world. It's seen to be a global, systemically important bank. In other words, almost too big to fail. But the problem is it looks like it wants to fail. And there's been a significant change in terms of the way in which it's trying to cut 9,000 jobs, cut businesses out, sell businesses in the United States. But then this attack on its share price happened overnight, which then prompted Credit Suisse to go to the Swiss equivalent of the Reserve Bank to put a statement out in support of it. So that statement came out overnight and effectively said this: the Swiss National Bank, which is that equivalent of our Reserve Bank, and the Swiss Financial Market Supervisory Authority, which is the equivalent of our APRA, the banking regulator, assert that the problems of certain banks in the USA do not pose a direct risk of contagion for the Swiss financial markets. But the issue is that the share price kept falling after that statement. The question of whether those nerves ultimately settle and whether, in fact, there is a way out for Credit Suisse, which does operate here in Australia, is a very important thing. OK,
so can it happen here? Can the contagion come to Australia?
Of course, anything can happen if there's enough panic, and there was certainly a bit of panic overnight. But the reality is that Australian banks, after the financial system inquiry by David Murray back in 2014-2015, made certain that Australian banks, all deposit-taking authorities, have significant capital to back them up. Now, this is one difference between Australia and the United States. Only the major banks in the United States have that type of backing. Here, there are 97 banks. All of them have to comply with the orders of APRA to maintain sufficient capital to back them up if there were some type of a systemic problem that took place. And inevitably, what normally happens is that somebody steps in. One problem, however, for Credit Suisse is its major shareholder and investor, which is the Saudi investment company, basically said last night it was putting in no more money, and that's what largely caused the panic.
Right, OK. So on to another different company with some different problems, another hacking attack?
Another hacking attack here. So this is an interesting thing, and we'll put a statement up for you here because it's only just happened in the last couple of minutes for you. And this particular statement comes from Latitude Financial. Now, Latitude Financial, I should point out, is the old GE Money, is the old AGC, if people go back long enough to remember that. It's had a hacking scandal, and it's come out and said it understands that approximately 103 identification documents, more than 97% of which are driver's licences, have been stolen, and approximately 225,000 customer records also stolen from the second service provider. So this is only just coming in the last little while. We'll wait to see what the impact of it is. I'll tell you one thing we might have by now. We should have the ASX 200 should have started trading now. Let's have a little look at that. You can see here already down some 59 points to fall. That's still building up. I'd suggest probably if the futures market tells us anything, it may even go a little lower by the end of the day. So anyways, that's the live prices coming in right now.
Yeah, right. Down as expected, just not down as much. But as you say, the futures say it's going to go even lower. Ross, as always, great to have you on the show. We'll see you soon.
Quite okay.